I hate overpaying on fees. I don't know about you, but I hate it. And AI is going to change all that. Hi, it's Paul Morrow, Smart Financial. We're going to have a lot of news this year about what AI is doing to the money management industry. If you're paying 1% for money management, it's probably because you had a money manager, they had a staff, they had research people, they had execution people, traders, etc. Forget all that. Now it's like two guys and a dog, and the cost has come down dramatically. So here's what the current behavior should be. If you have a $1 million portfolio, you should be paying about half of 1%, not 1%. And let me just say how dramatic that is over your lifetime. For a lot of these money managers, especially the ones that advertise on TV all the time, they say, if you've got a $500,000 minimum, give that money to us, and we'll only charge you 1.5%. 1.5% on $1 million is $15,000 a year sucked right out of the account. That means in retirement, from 73 to 93, you're talking about $400,000 of withdrawals. You might make a little extra money if they're great managers, but the one I'm talking about is just plain vanilla. So let's talk about how you can actually save money on fees. Now, I'm a big believer in having a great equity manager. And that equity manager in this day and age with AI should probably be charging you something like 0.75. That's a pretty big savings over paying 1.5. That's like half the rate. Plus, if you're in a balanced portfolio, any investment 101 book would tell you the older you get, the less in equities, the more in fixed income. And the adage has always been 100 minus your age. So if you're 70 years old, then you should have maybe 35, 40% in equities and the rest in fixed income. If you're 80 years old, maybe 20% in equities and the rest in fixed income. As you get older and you're over 50, over 55, you should look at having a balanced account, and you should not be paying fees on your fixed income. You should be paying fees for a great equity manager of about 0.75%. So for those people that have money managed accounts, AI is doing some things in the employment space that are disturbing. I saw the layoff notices. AI is eating jobs. However, for those of you that are in the money management business, this is a good thing for you, because the elimination of the human element in the money management business means that there will be significant amount of savings passed along to you. Now, if your investment managers are not passing that savings along to you, I will give you a referral to people who are only charging half of what those managers are charging that don't use AI, and getting top quality management from the kind of companies that you're used to hearing about, Fidelity and Vanguard, et cetera, because those are just investment products. The folks that manage them get to charge the fee that they like to manage those Vanguard portfolios or their Fidelity portfolios or other mixed bag portfolios. So let's be realistic about this. I do think you need to have a great financial advisor who is also an investment manager. And I do think you need to get a lot for your money. Don't hide your head in the sand and keep paying 1.5% for just mediocre average management, when you can actually pay half that and get better management. Because folks, we are not going to do the research on stocks and bonds and mutual funds faster than AI is going to do it. It's just not going to happen. You might resist this, but I will tell you that AI is here to help investors. Getting AI on your side to reduce fees, that's just part of the art of being smart.